Alright, hello everybody. Welcome into the NinjaTrader Ecosystem webinar room. Before we get started with today's session, I would like to take a moment to test for picture and sound. So if you can hear my voice and if you can see the AMS Trading Group slide on the room, enter the letter Y into the room, and that'll confirm that you can hear my voice and you can see the picture. Alright, looks like I'm getting confirmations. Thank you all for confirming that. And thank you for joining us in the webinar room today. My name is Ryan Lai, and I work at the NinjaTrader Business Development Team. And we have a very special event for you today with Niels Koops of AMS Trading Group. Before we move forward at all, I did want to put a quick poll into the room. And we're going to ask you what types of tools and services you've started to use from the NinjaTrader ecosystem, if any. So while you fill out this poll, it'll give me an opportunity to also read over this disclosure. And I'd like to mention to everybody in the room that it is important to understand that there are substantial risks in trading commodity futures contracts and Forex. You should carefully consider whether such trading is going to be suitable for you, and this will depend on your specific circumstances and financial resources. It is possible to lose all of the funds that you deposit with your broker, and you can even incur losses beyond these amounts. I'm posting a link into the room to our risk disclosure, so you can inquire here for more information, or for a copy of the CFTC full risk disclosure is also posted. Please remember that these training webinars are not a solicitation for any services or a recommendation, but simply educational in nature. And this presentation is being presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. If you have NinjaTrader brokerage-related questions, they should be directed to the NinjaTrader brokerage directly. There's a phone number you can call, which is 312-262-1289, and you can also email brokeragesales@ninjatrader.com. All right, thanks for filling that out. Looks like in the lead we have people using the ecosystem mostly for indicators and strategies. And then there's quite a few people in the room who haven't used the ecosystem yet. So you can go and check out the ecosystem website and look for a lot of different services offered with the vendors that are listed there. There's new tools and apps added nearly every day. The NinjaTrader ecosystem is home to hundreds of apps and services, and you can easily and quickly search for these tools on the website or the services that you're looking for with a simple keyword search. You'll also find information about our upcoming webinars and an on-demand video archive of all of our previous events. So if you're curious about that, go ahead and take a look at the NinjaTrader Ecosystem website. Also, if you're active on social media, please ensure to follow or like NinjaTrader on Twitter and Facebook to get updates on all of the things for the NinjaTrader ecosystem. And NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure that you're on the latest version of NinjaTrader and to pick up a live data trial, you can take a look at the following link. And if you're just getting started with NinjaTrader, we do offer free live training webinars on a daily basis. And you can view the schedule for this at the following link. All right, so with all that being said, we do have a very exciting, unique event today with Niels Koops, and he's going to show you how to learn how to, order flow allows traders to develop their bias and make informed trading decisions. Viewing the most detailed information on buying and selling in the market, some distinct patterns can be identified. Understanding order flow can give you an edge in real time, so you can act quicker than waiting for lagging indicators to form a signal. So again, thank you all for your attendance today, and without any further ado, it is my pleasure to welcome into the NinjaTrader webinar room, Niels Koops. Go ahead and take it away, Niels.
Yeah, thanks, Ryan. All right, so thanks for joining in. Can I start a screen share already? Yeah, how's the audio, by the way? Is it good? All right. Okay. Sorry, can you click to? All right, let's start the screen share. Here we go. Yeah, so a little bit about myself. Been day trading full time for a little over 9 years now. That's in short. You probably read the story already, so I'm not gonna go over that so much. But order flow, yeah, it's something that I discovered a while ago already. It might not be new for you, but it might be for a lot of you. So the first thing I want to get started with is kind of like it's called footprint, like the Bidask profiles and numbers. So my first question is for you. For who is it new, or is everyone known with that? Do I have to go over that? Just a quick why. Do you want me to explain the footprint chart? Yes or no? Okay, yeah, too many new ones. All right, okay. So can you all read the numbers in the chart? You can see the chart, right? I bet you can. So, okay, so it's split in a left side number and a right side number. So the number on the left, those are contracts traded on the bid. It's very small. Maybe you can maximize your screen. I can. Maybe you don't mind. So the number on the left are contracts traded on the bid, right? So it's actually traded contracts. On the right is volume or contracts traded on the ask. So what does that show you? Well, let's fast forward. Yeah. Okay. So this is just happened. I paused the data because otherwise it was messing it up. So what you see here is kind of like it's giving you aggression in the market, right? Because there's always a buyer and the seller at whatever price, but it's more important like what side does it trade, right? So if it traded on the bid, then there was an aggressive sell, right? And if it traded on the ask, then it was an aggressive buy, right? So it's a big difference in who initiated the trade. So, and that's printed on these charts here. There are a few ways to show the difference. So right now I'm just showing the volume profiles. And that's something we recently updated, added. I kind of like it actually, but normally we kind of did this one, and then just show the POCs. That the POC is the point of control, so it's the highest volume of that bar, and then filtered. But we can also do this one, and I kind of like that better. It's personal preference, but it gives you a view of where the volume is inside the bar, right? And all right, so to get into the bar, how is the bar formed? It's not a candlestick chart. I mean a time-based chart. It's a reversal chart. So I'm just going to go ahead and explain that because there are probably some people that don't know what it is. So right now you can see it on the top left. It's a 10-tick reversal, so it will not make a new bar unless there's a 10-tick pullback or more, right? So that gives you kind of filters out the noise, because you know, well, if you just kind of print a 1 minute chart or a 5 minute chart or a 5-tick range chart, in my opinion, it's too noisy, and especially when you're watching volume and order flow, it's for me it's too messy. So the reversal bars gives me a really clear view of where the volume has traded and on what side. What does the green, orange, green, and red? Right. Okay. Yeah. So what I talked about is just the bars inside the charts. So on the right, well, you can see it now because the middle one is the yesterday's profile, but we are way above yesterday's high. So that's below. The one on the left is today's profile, and the colors are the difference in delta. So, and what is delta? It's the Bidask Delta. So it's the difference between the aggressive buyers and the aggressive sellers, right? So at the higher, well, I don't think it's going to help a lot, but when you, I can do it now, scroll back lower, then you can see some big differences right here. So there's a lot more buyers. Does the screen update quick enough? Yeah, I think so. So this is like mainly blue, right? So and below here is mainly red. So this is a big thing for me because it's a clear cutoff of where the sellers took control and where the buyers took over, right? So we can actually take a look at that right now. Let me scroll back. What happened over there? Well, it's pretty clear, right? So this was kind of the breakout level, or it was the breakout level. So we consolidated a while, had at the 10s, a little pullback, and then broke out, and kind of never looked back. Right? Makes sense, right? Or not? If not, let me know. Yeah, all clear. All right. So the reason I'm watching this is because with a candlestick you only see the open, high, low, close, right? But with this, you actually see the market in real time and what's hitting the market in real time. So just a bit what I was. So if you wanna like clear the colors. Oh, it's updating slow. Oh, okay, that's annoying. Well, I'm in the Netherlands. That also probably doesn't help. All right, I'll take note of that. Thanks. But now it should update, right? The screen showing the recent highs. Yes, great. But the reason I'm watching these numbers is because it's real volume. It's actual like traded volume, and especially with the futures, there are no black pools, right? And so everything that's traded, you can see that over here, and that matters a lot. So, for example, let me get the pointer. Where does one set up these TNT? Well, that comes with our software. It's a reversal bar. It's nothing really special, but it's just something that we use a lot, mainly. It's just a setting. You can set it to 10 ticks depending on the. And by the way, let me read the question. So where does the setup? Where does one set up these 10 tick reversal bars? Yeah, so it comes with our software. No, it's not built in Ninja. No. So so I just explained the reason, but the setting is really simple. So you can set it to any tick size you want, depending on volatility, right? So usually with the ES, I switch around 6 or 8 tick, but since we have some bigger volatility lately, I moved it to 10. And the reason for 10 is that so 10 ticks, that's 2.5 point, right? In the ES. That the reason is that the common pullbacks or the common swing sizes that they're not directional, you can see it already here is 3/4, 3 even, 4. So the smaller pullbacks or swings are a little bit around that size, right? So I don't want to see all the noise, but I just want to see some pullbacks that I can trade. You know, I usually trade enter on pullbacks because you usually get retested. So if you don't buy the pullbacks, you're usually ending up buying the highs or lows. And well, yeah, we all know that's not really profitable. So yeah, so pullbacks. So this is the highest volume of this bar. Can you? Yeah, I see the screen is really slow. That's annoying. Anyway, so I'll wait. I can see when it's updating now, so I'm going to just go wait for that. So right here, that's the highest volume of that's in the chart right now. So it's significant, right? It's also the last hour of trading, sure. But the interesting thing is that it moved higher from that, and the pullback was really, well, not that great. But on the pullback, that's the most interesting for me, and it pulled back right into that high volume and a little bit below. And for me, that was a buy. That was a buy. And the main reason is because it broke up higher. It didn't see a lot of rejection yet, but the pullback was really good because a lot of people were off sides, right? So here at the high profile, okay, the high profile. So you can see 4K sellers and around 4K buyers. So that's an inflection point, right? So you want to watch what's happening over there. So let me see if I can finally draw. Yeah, right, that's better. So it's about this profile. Can you see the blue drawing now? Is that probably going to help a bit? Where do we see that the bar shows a pullback? Yeah, so if it's okay, so if it's a pullback, you know that because this is the high of the bar, and when it's pulling back, it's making a new bar, right? So unless there's no new bar, there's no significant pullback. So every new bar is either a new directional move or it's a pullback, right? So that's the good thing about the reversal bar. So you don't get confused about what is what. Anyway, so it had a little bit pullback, then it broke out higher to here. But that didn't go so well. So the pullback over here was interesting because it was right at the higher volume here, right? Give or take 2 ticks, but yeah, you know, nothing's perfect. But so this was a really good setup for the retest of the high, and doesn't even matter what your bias is, and I'm going to go into that later. But there are just so many people offside of that at that point that it's likely that to get another attempt to make new highs, right? And I usually go out, well, with the volatility lately, 2 points is a little bit low, but normally my setup is 2 points scaling out. But with the volatility right now, 3 points is more. It's a better setting. So one like 26 is something around here. I would scale out depending on what I see in the order book, and I'm going to go into that later. But so that's helping too. So let me show that now. Oh yeah, sure. Let me clear this chart first. So you clarify the concept of the reversal bars. How are they constructed? Yeah, so it's in essence really simple. But I'll get the pen again. So let's say it doesn't matter. So it opens. Oh no, I got the no pen. Hold on. Try to. Yeah. All right. Can we see the blue drawing on the bottom? Drawing on the bottom. Yes? Yes or no? Yes or no? Okay, good. So let's forget this is a new bar. So it's moving up, right? So the reversal bar keeps going up, unless, depending on your setting here, it's a 10-tick reversal. So 10 ticks are 2.5 points. So unless it goes, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And this is also where the open candle forms, right? So from this point on, there's a new bar form. So this was the opening of the bar, right? And then it can do whatever you want, but so it moved a few ticks higher, but the most important thing is move lower, and from that point on, it's gonna count another 10 ticks. So unless it went back all the way here, there was no new bar formed, right? So it was still the same move. So you can still see the volume coming in that move, but it didn't. So it moved up. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 ticks. Well, you can see it on the candle already, the green bar. It opened here, right? So that's what opened up the new bar. And then it went up a few ticks maybe, and then down. But it didn't went down 10 ticks, so it's still the same bar, right? Then it went all the way up to the high. And then we're going to count again, 10 ticks, right? Well, I'm not going to count it, but it's here. Yeah, is that clear now for everyone? I'll take that as a yes. All right, so let me clear up the drawing. Yeah, so I was about to tell you about this, and I'm gonna move it around so that both fit on the screen. Is it gonna work? A little bit. So it updates, right? Okay. So the 28, right? What happened at the 28s was that, I'll use the pen again. No, wait. Let me explain what this is first. You may wait. There's a 10 tick setting for reversal bar. Yes, it's set at 10 ticks. Yes. And it depends on volatility what's the best setting. But for now I use 10. But it's also kind of personal. It depends on your trading style as well. So mine is mainly scalping, so 2, 3, 4 points, right? Really quick, going in and out, 10 minutes trade, 5, 10, 15 minutes trades. Then 10 is for now good. If you're trading like more swing trade, then you can maybe use like a 16 tick. So that's also kind of depending on that, what you want to use, right? But it's the same with like using. So let's say if you're a swing trader, you probably, I don't know, but you probably won't use a 1 minute chart, right? So if you're a swing trader, then you kind of use I don't know, a 15-minute chart or maybe even 30. I guess, I don't know. I've never tried that. Yeah, no, yeah. No, true. It's you've never seen a reversal bar, sure, that's possible. It's not a default bar type, true. Yeah. Where'd you get it? Well, you can get it without software. So it comes without software free. Yeah. On any package you get. Anyway. So yeah. So what the new chart you see now? So on the left chart here, you see volume that's actually traded, right? It's actually traded contracts split on bid volume and ask volume. But what you see on the right chart, that's intended volume. So it's a bid ask in the order book. So it hasn't yet. So for example here, you can see there's a pop-up possible if you click on hover your mouse over the chart. So it shows you what the info is in that lighted up line, right? So the ask size is here 405 contracts. So 405 contracts on the ask, right? So it probably was a bit higher over here, and that kind of also came together with the high over here, right? So the importance with that is that you needed more buying power to blow through that, and even here, this was even higher, the 30s. I think that, I don't know, I think they had like 1100 in the book over here in the order book. So they needed the whatever it was, like 600 contracts to be bought, and then here's some more, and then this one was the big struggle, right? well, we came that later, but that's not important right now. So this was the next, like, kind of like, how do you call that? Plateau, I guess. You can call it plateau, I guess. So that's kind of what it means, right? Does that make sense? Yeah. So you need volume traded at the prices, but you also need power to blow through all the offers and bids in the market, right? So they did a good job over here. Just blew through it, and then here too. And then you want to see it supported by bids coming in, right? So if the market moving higher, you need power to blow through the offers, but you also need bids to support that, because if there's no bid supporting that, it's just a weak move, right? And that's the logic I use. It's just, yeah, like kind of what happened there when it moved down. There's no bid supporting it. So why did it stop here? Oh, sorry, there's a few second delay, I guess. So why did it stop here? Well, I think I just showed you that. What was the price level? 23. So if you go back to the other chart, and then you see, let's pull back. 23s. Hey, what's that? That's interesting, right? So let me use the pen back. Yeah. So that's what happened over here, right? So it was a pullback right into that volume that previously hit, and that's exactly what I just meant to say. But I bet it's a bit more clear now. So even though there were no supporting bids, there was supporting volume, because everyone who sold it here or just didn't feel comfortable buying it anymore when it moved back from the high. They get out, you know. So they get out, and that gets people to buy it here and sell it, sure. But it's getting a point of interest, right? So because of the volume previously traded, does that make sense? Do I need to clarify that? Yes, no, all clear, or everyone asleep? I don't know. Won't after hours trading skew the data? Yes, of course, yeah. Well, what data are you talking about? I mean, this is so that's why I use, when I'm doing presentations, I this is because you cannot make up everything. I mean, you can find perfect examples everywhere if you want, you know, but yeah, that's just too easy. But so this just recently happened, but sure, after hours it's different. Yeah, totally. Well, it's after hours is just different. The books are more empty, right? So if the normal bits in the AES are like, I don't know, like lately slow, but like 800 both sides, right? So bits in the alpha maybe like 800 on average. So in the you mean overnight market, right? After hours, yes. So it'd probably be like 200, 100, and lately it's only 50. So that's really low. But what happened was, and I noticed that like when the low hit on in the pre-market. So with the software over here, this one, and I reset the data, so I lost it. That's too bad. But it kind of happened a little bit the same as happened over here. Do you see the box I'm drawing now on the right? That happened in the pre-market, and because it's percentage-wise, so the lines are showing a percentage-wise or to a setting that you like, you can still see where the high bids and the high offers are, and you can still see the chart on the right. You can show the profiles relative to what's on the chart, right? So not relative to what's normal in the RTH, so the regular trading hours. So in the overnight, it's relative to what's trading right then. Does that make sense? And I think it's a big difference, sure, but still, if you're looking at relative data, if you look at relative high or low volume, then it can still be useful. And it was this morning, so it kind of happened the same like this. So they were bidding, and then it moved lower, and they put in bids in right away. They put in like a 650 lot right after the flush hit at the I don't remember the price, but there was some kind of flush pre-market or something. I don't know, maybe earlier because I was up from the EU market already. But the same thing happened. So right here, they put in a bid to support it, right? So they didn't trade it, but look, when someone put in a really high bid, right, like 1, 2, 3K, the market is going to notice that. You know, either someone needs to unload really big, they're going to hit it right away, but most likely they won't. They just want to play it out. They have a buyer in the market, so they probably going to algo it up, right? So just make him buy higher. So yeah, that's usually what happens. So when you see a flush and then a big bid coming in that's not being hit right away, then you have a good chance of finding a low or a term low. Yeah. Another question: do you have a clear example strategy on how you trade the bar, net delta, and buy trade example net delta? If you use net delta at all when trading, I don't use the delta when trading. I have it on the chart just I don't know, just to show it, I guess now. But I look at the delta of the day. I do look at that, the daily delta. Right? Can you see that? So that's what you meant, right? Oh, you mean the wait, you mean the other one? On the, sorry, hold on. You mean the one on below here? On the bottom, that chart. Can you answer? Net delta on bar level. Yeah, okay, so you do the other one. No, I don't use it. No. I don't think it's that interesting. You can already see it, and you kind of see the like. Look, you can also like split it here. So if you use the delta print bars, that's normally what we use, but let's use a different color. Like make it really stand out. White. I don't know. Let's go for white. You probably can't read the numbers anymore, but that's all right. So this is showing you the delta. Yeah. So you can see the profiles now split on Bidask. So what's the point of seeing the net delta on a bar? It really depends on what bar size you choose. It depends on the time frame you choose it. So and that depending on what time frame you choose, the whole information is going to be different. So how is it going to help you, right? So no, I don't look at it. No. I do look at the daily delta, so the delta day, because that's pretty interesting. When you look at a big delta on the day, so let me point it out. It's right here. So the number of the delta on the day, so the whole session. So if it's more than lately, yes, it will be recorded. So the delta on the day is interesting because I've noticed over the years that when the delta is on the end of the day at like 20 or 30K up or down, it's likely to continue that move the next day, right? So yeah, little giveaway. So if the delta of the day is at the end of the day is around 20 plus K or more, it's likely to continue that move the next day. Yeah, all right. So that's the only thing I use, pretty much. Yes. All right. So let me get back to erase. So does it make sense? Is this clear what I just tried to show you? And if that wasn't clear, the software I'm showing you, that's our own software. And it's, well, yeah, I can say it's pretty cool because we made it, but and it's really useful because there's also the possibility to change the settings without reload. And if you have used NinjaTrader before, I think on most indicators you have to reload the whole chart, right? And due to the fact that this is using tick replays because you need tick data to populate the chart, it's going to take a while to load normally. But right now, like I just showed you, you can just change the setting instantly without having to reload the chart. So yeah, it's pretty good in my opinion. Okay, so so that's how I combine the intended order flow, so the bids and asks in the market real time with the executed volume in the footprint chart, right? So with the bid ask volume. Is that clear? Any questions about that? All clear? Wow. Really? Yeah, so okay, so let me try to show you a trade example. So so I'm looking at directional moves, right? And then I want to trade a pullback to get in. So like here they hit the low. So it was the IB low. So that's also something that's with our software, by the way. So really useful stuff. It's called session statistics. So here you have the open, IB high, overnight high, POC midpoint, overnight midpoint, and the IB low. So here was the IB low. The IB low was at 50, I think, a quarter. So then we had the directional move here with volume, right? So the volume was decent. And then I look at how the volume is traded, right? So like here is a clear cutoff of the volume. Can you guys see that? Like a little bit of a B profile, right? Well, more a P actually. But the top side is a P. Can you see that? Yes or no? Please, a quick yes or no. Thank you. Thank you, Oscar. All right, so what happened is the volume traded at the top of the chart. So and also you can see here it's unfinished. So what does it mean if it's unfinished? So the same happened over here. So it's unfinished. So the footprint chart is unfinished when it's trading both sides, right? On the top of the or the bottom of the chart. Number, I would still be interested in like seeing how that is going to react, and especially on this one here. Here, the one I'm just was pointing out. So that's unfinished, right? So it's trading both sides at the high. So that means that I'm interested in buying the pullback, right? So the pullback, what I said is the 10 tick. I'm looking for the 10 tick reversals. So I'm looking for around 3 points or 250, whatever, for an entry. So first of all, I'm looking at a little bit of an LVN to enter there. So that's what happened over here. A real nice cutoff of where the volume is. Then also it's a 3 quarter point pullback. So, well, yeah, you can kind of guess where this is going. This was a really good entry again, right? So the 10 tick. So even though if you did 10 ticks, so 10 ticks was around here, it would still not be a bad entry, right? I mean, everyone is going to be outside a few ticks now and then. So, so for that reason, I would buy it, right? And then you can, I don't know, probably not to the high, but this is a 5-point up move. So me, myself, are probably going to exit at 3 points as well, but, and then hold a runner for the rest. But some questions. Gerald, you're new to order flow. It's difficult to grasp. So is this basically no, it's not the basic concept to trade bid-ask volume imbalance. We do have that. Let me clear up that. So if you want to turn on the imbalances, and that's maybe something that sounds familiar for more of you, you can turn it on with this enable delta imbalance, and maybe you can even just turn off the bars. So now you can see the imbalances, and what does that mean? It's currently set at 250, so it means that it cross-checks it, right? So right here, if you can see that, so the 250 contracts is more, I'm sorry, so the 623 here, that's red, that's more than 2.5 times the 250. And same, yeah, same goes, well, it's usually at the bottom anyway, because it's usually low prints at the bottom, so that's not really interesting. So it gives you an idea of where the power is, I guess, of the buyer. So when you see multiple imbalances form, it's giving you an indication of what they're doing. So there's just not a lot of sellers anymore, right? So it's logical. But for me, yeah, I don't use it. No. Do you use any? The regular order finding? No, I don't use it, no. But the main reason is because it's usually like it changes when the bar is open, so it changes all the time. So unless it moved higher, but then you need a good pullback to actually do something with it. But still, yeah, I think volume is way more important than where they initiated, right? So sure, it's nice to see where they kind of took off, you know. But when you like here turn on the volume again, well, I think we kind of see the difference, right? So you can also turn on both if you want. But the most interesting thing is like here when I see the volume over here and the really nice cutoff over here and then some volume over here. So I'm kind of looking like, okay, so here's the volume holding. So that's interesting for me, right? And not these imbalances, because if you either bought here, here, or here, I mean, you wouldn't have been off that much, still like 6 ticks or so. But for me, it's just not. It's not a trigger. No, I know it is for a lot of people, and if they trade it profitably, or do you want me to go to through another one, or is it clear? Let me like go to the open or something. Let's see. So another option is, by the way, so this is maybe useful for overnight trading. So right now the filter, so the sizes of the profiles are set to an auto. So it uses the biggest one, and then the rest goes with that. So if there's no profile filter, then you can see everything at the same size. But the reason to use the auto filter is that not every bar has the same volume, right? So in my opinion, when I look at where high volume is, and more low volume is, sure, but the high volume is usually more important. But so high volume is interesting to see where it hit, and then you want to enter on the low volume, right? So I'm going to go over that in a bit. So HVNs are like attracting, so high volume nodes, and low volume nodes, LVNs, are rejection, right? So that's is that concept clear, by the way? LVNs, HVNs, is that clear? Do you guys know what LVN, HVN is? Yes or no? No? All right. So let me use the filter again. Or let's do so there's also another option on the profile, to use a minimum amount of volume to print a profile, right? So if you're not interested in volume that didn't hit at least 1K, then you can leave it out. And that also gives you some real time, right? So that's the reason I use it, because well, maybe 10 years back I looked at RSI or stochastics or MACD, but yeah, I mean, if people trade it, sure, no offense, but yeah, for me it doesn't really make a lot of sense. At least not day trading it. So maybe swing trading, maybe. But this hits the market real time, right? So you can really act really quick on it, because yeah, it's happening instantly. So yeah, so same thing here. So the higher volume over here, that's right where it pulled back to. So that's some another way to use it. Yeah, so that would be a setup for me. Yeah, that one. Create a pullback. And this, by the way, the cyan line is the VWAP. So I use that a lot too. So the VWAP is the volume weighted average price. It's the only indicator that I use, because it's based on volume and not some kind of lagging average meter. So, and also on the VWAP, a lot of algorithms are formed, mainly for institutions. They trade a lot of the VWAP because they have to trade a lot of volume, and the VWAP is the kind of like the yeah, the next thing I want to talk about, that's maybe the most interesting actually, is why is not everyone making money, right? I mean, like these things that I just showed you, they look really cool and sure they work, but even though you use that, you can still lose a lot, right? So why does it happen? Like, I got a few reasons. The first one is greed. Greed is good. We all know that, but it can also like hurt you a lot. So let's say you kind of like are on a run, and you think this is gonna go. You sold it here with the VWAP. It's a good entry. It didn't hit your target here. Maybe you scaled out once, and then it's running against you, right? So, and then you got so many opportunities to go out, and it turns from trading into gambling. And then even the good setup that worked, could have worked, you messed it up by greed, wanting more than you initially set for. So don't do that. That's why I usually trade really so I trade. So that's why I aim for 3 points, because it happens all over, right? All over. The 3 points happens all over. So if you want to hit the 10-point runner, sure, it's possible. Yeah, sure. But you need a lot of patience, right? You need a lot of patience to let that happen. But another thing is fear, right? So if you're so scared money, doesn't usually win. We all have those days. But usually when you're afraid of it, and I don't know, you think lately with the volatility, right? I mean, I got scared a few times. I was buying it when it went down pretty fast, and we call it cardio in the chat. What happens is that you're scared of adapt real quick, because when the volatility hits, your stop is not going to be 3 points, but you have to maybe do 5 or 6 points, right? Because the rewards is also going to be significantly higher, right? So it's going to be, your reward going to be like maybe 8 or 10 points. We've seen that enough lately. So, but if you're going to be scared and full of fear, yeah, you're going to be run over all the time, and so that's really going to get you. So for guys who is new to trading, yeah, remember that, you know. We all gonna make mistakes. I made them too, of course, everyone. Just be aware and try to think, like, try to wait, the question. This is probably a dumb question. Well, there are none, yeah, right? But I heard you talking about 2-point market maker moves. Oh yeah, and YouTube. Yeah. Their market makers are everywhere. Yeah. So the 2 points, it's like a balancing move, right? Now they're higher because the volatility is higher, so it's 3 points, but the market always needs to balance, kind of, right? So well, right here, like here. So yeah, nice example. So let me draw that. So the whole range of filling up. This is an 8-point move from here. When you're looking at 5-point trades, when you so badly want to have a 5-point winner, and you're ignoring the fact that it's going up and down here, right? With the market maker action back and forth, you're really missing the essence of what the market is doing, right? I mean, that kind of makes sense, right? You're just kind of ignoring the fact that the market isn't moving in the way you want. And when it's doing that so many times, yeah, it's just pretty clear. Sure, it can go down here, of course, yeah. But when you see that 1, 2, 3, and it doesn't go down, it needs to break in my opinion, on a third test. And so I usually at least scale out to third here, like at the low end of the swing sizes. And then if I'm lucky, I'm getting this one, and otherwise I'm just going to stop out at the balance on the rest, right? Makes sense, right? Zero. Or not. Good. Secure, right? So when you had a big loser, and well, I've usually a little bit bigger, because you're thinking like, oh, okay, so I had so much gain this week, I can risk that too. But yeah, I mean, that's not a good reason to stay in it. It's better if you do that, to keep like analyze yourself and what you're doing, right? I mean, you gotta have a plan. You know how many contracts you're gonna trade with your account. You're gonna up your contracts if you're up so much on the week or month, right? So if you for example, if you trade one contract for every 5K in your account. So if you have gained 5K, you add another contract, but not before, right? So that's the way to do it. And that's I think, in my opinion, a big issue where people are gonna fail. Yeah. So the next thing is discipline. Well, that's kind of everything together, right? Be disciplined, because this isn't easy. Even though you can have like the best tool, you gotta have discipline. Otherwise, you're just gonna screw it up. Really, believe me. Yeah, so I'm kind of through what I wanted to tell you guys.